New Zealand and South Korea both raised their official cash rates today as they seek to drive inflation out of their economies. In New Zealand, the cash rate was increased by 0.5% to 2.5%, still well above the cash rate here in Australia. Business Editor Ross Greenwood joins me now. Ross, is this a sign of things to come for us?
You almost imagine it might be, because quite clearly economies in the Western world right now are trying to drive inflation out of their economies. They are getting a bit of a hand from oil prices, which have collapsed. But remember, that's on recessionary fears. Effectively, when the world goes into recession, output drops, and therefore the need for energy, the need for industrial output, it also declines. That's not a good thing. It's actually not a good thing under these circumstances. So New Zealand actually raising these interest rates by 0.5% today, take the cash rate, as you say, to 2.5%. Now, it's interesting also to note South Korea today, that was historic. It's not raised interest rates by that amount in the past. Note also the Australian cash rate right now, 1.35%, is well behind both of those Western economies. Now, the issue here is not just for the Reserve Bank here, but also for the government, because it has to try and find ways to quell inflation in the longer term. That's part of the reason why we have a jobs summit coming up on September the 1st and 2nd. I caught up just a short time ago with the Treasurer, Jim Chalmers. Here's a little of what he had to say.
Yeah, every country around the world's got a version of this challenge, or almost every country. And I've spent a lot of time actually with the New Zealand Finance Minister, Robertson, who's a friend of mine. And I know that our sisters and brothers across the ditch are dealing with a substantial inflation problem, and that obviously invites some monetary policy tightening by the central bank. And we're having that here, the Americans, and elsewhere around the world. So most countries are dealing with this challenge.
But New Zealand also issued a warning about its economy that might have echoes for us here in Australia.
Yeah, it's really important to note that by raising interest rates to 2.5%, it's taken rates above neutral. Now, it had previously said that it believes that a neutral interest rate in New Zealand was 2%. It then put out a statement as part of a much longer statement today, and this is what it says. While there are near-term upside risks to consumer price inflation, there are also medium-term downside risks to economic activity. And this particular statement almost echoes what's taken place in the United States, where Jerome Powell has said he would prefer to risk pushing the United States into recession than to have long-term inflation remain. So that's a really important statement. And you get a sense that that's similar to the attitude taken by the Reserve Bank here in Australia, that even though really there is an expectation Australia's economy will not go into recession, it certainly will slow down next year. And therefore, if there is prolonged inflation, therefore higher than expected interest rates, there is also the risk that the economy literally tips off the track, as it were. And so I think that's a really important reminder for people as these interest rates continue to rise.
Yeah, it certainly is. And how did the markets respond to all that? Our dollar has hit in recent days.
Well, it sure has. And today, sitting around 67.6 US cents. It's the US dollar in particular that's incredibly strong. You can see here, this is a live chart, the dollar 67.65 US cents. And in the past week or so, the past month rather, down almost 4% from where it was above 70 US cents. But the important aspect of this is, as I say, the US dollar is especially strong because of the rate rises that are expected there. And so for the first time in around 20 years, the US dollar overnight has reached parity with the euro. So in other words, it's basically €1 equals $1. As I say, that is highly unusual, and it means quite clearly that Europe right now is considered to be a pretty cheap place for the United States travellers and certainly businesses as well.
No doubt. Ross Greenwood, thank you. We'll see you again at 4:30.